Welcome to Checks and Balances. I'm Michael Vincent. This is James Blair, and another Money Month banger. This one is gambling versus investing. Jimmy, hit him with it.
Cool. So just click on this link and you can get rich real quick. That's what today's episode is about, gambling versus investing. So sometimes I have some young finance bros come up to me and go, I'm comfortable with a little bit of risk, I guess you could say. And I go, oh, because they don't understand, Mike, the difference between gambling and investing.
Yeah, absolutely. I'm going to sidetrack this one straight off the back and go, I actually had two finance bros come to me they were finance bros, quite young ones, come to me for a mortgage. They're going to buy a house together. And we're sitting there like chatting about stuff. And I'm like, cool. If I go through your bank accounts, is there anything in there that like the bank's going to see? We're like, well, what the hell is that? And they just like looked at each other and then looked at me. And I was like, what have you done? Like, what
have you done?
Yeah. I was like, what are you doing? And they're like, tell them about the gambling. And I was like, what? Turns out what they'd done, they'd found a way, because they're like amazing at math, to like completely hedge these like bets that they were placing on. There was like some bonus bet scheme. And they were like, no, it's like basically risk-free gambling. And I was like, okay, that sounds like BS, but like, what are we looking at? And they're like, oh, about $4 or $5 a week. And I was like, you pardon me? And they're like, yeah. And then Wimbledon was on, and I think we did like 12K in 1 week. And I was like, and this is legal? And they're like, well, yeah. But the TAB shut us down now.
Yeah.
I was like, Jesus.
Yeah. I wonder why they didn't go bigger, maybe like to keep under the radar or something.
They couldn't, because they were running like 10 accounts.
Right.
Yeah. And it was like family members were having to transfer money around and stuff. It all sounded very shady. They assured me it was above board, but the TAB did shut their accounts down and let them withdraw the money.
Yeah. I was going to ask you actually before you started saying, are you sure you want to tell that story? But now it's out there.
Hey, you don't know who they are.
Yeah. Cool. So the concept of gambling versus investing. Mike, let me ponder you with a question. Are they the same thing or are they different?
Oh, that's introspective. I'm going to say they're two sides of the same coin, because a lot of the time what is investing does feel like gambling, because the people who are investing are not taking into account the risk, the time frame, and the goal. They are just putting money into an investment that they think will give them a return. And probably they think they will get a return that's much higher than the actual return they'll get. So I would say a lot of the time when people are investing, they are just gambling.
Yeah. Yeah. I mean, when you think gambling, you think like
Blackjack, poker.
Yeah, Cassie, TAB, those kind of things. But there's certainly times where people are investing into traditional assets like shares and like property, but doing it in a way where they're justifying its investing, but the level of risk they're taking is very significant.
Yeah, and I think, and a lot of the times they don't know the underlying risk of the asset, even if it is, or the asset or the way that they're doing it. And the case in point here, and I'm sorry to bang on about them, is Sharesies. People think like, this is way less risky than the TAB because, it's shares, it's companies, it's, like, you know more about the sports teams that you are gambling on than you do about the stocks that you are picking and the companies you are investing in through Sharesies. That is more of a risk a lot of the time, sometimes, than it is on the other end.
Yeah, yeah. I had a client who was telling me about their dad who pretty much got pulled up in I guess it was a scam because he lost everything, where it was like a day trader, and then he gave the money to this day trader, and he lost like $100,000.
Yeah.
And you go, well, day trading is investing into shares if that money was ever invested at all.
Which questionable.
Yeah. So anyway, interesting.
Yeah.
So let's go with some definitions. So gambling often seeks instant reward. So think lottery win, slot machines, your sick 10-piece multi-bet on the weekend. Investing is a long-term game focused on growth over extended periods of time. So gambling is very short-term. I want to change my life or receive a lot of money very, very quickly. Investing in the long term accepts that, it's a long road. There'll be ups, there'll be downs, it'll be windy. You have to be consistent.
Yeah, absolutely. Right. And with investing, And also with gambling, a lot of the times there is analysis that goes into it, right? And there is, analysis that goes into someone placing a bet on a certain sports team. There's what was the case out of, was it Hong Kong, I think, where the guy was running like a model that took them 7 or 8 years to build on horse racing in Hong Kong. Walked away overall, I think, 1.2 billion. So you can say fundamentally that there is some research and some analysis going in there. Whereas on the investment side, there's also research and analysis that goes into it. It's just that, again, that timeline of what you expect out of the investment and the timeline of when you're going to receive those rewards is fundamentally different.
The other example of gambling, which you wouldn't consider gambling, there is ways you gamble with your KiwiSaver. So let me give you an example. You are a first home buyer and you're going to buy a home in 6 months. Come and talk to me, and I go, you're in a growth fund right now. You need to get to cash because you need that money in 6 months' time, and you don't know what the share market's going to do in the next 6 months. And you go, but I might miss out on some more returns, James. I go, yep, but you might lose some money as well. And you decide to leave it in the higher risk fund where you do not know the outcome over a 6-month period of time. That is gambling.
People find that really difficult to grasp when we tell them that because you just intrinsically think your KiwiSaver is just going to keep going up over time. People don't see it as a risky investment because it's KiwiSaver. It's safe, right? But actually, no, it is very risky if you're in a high growth fund. The other thing to think about with, I guess, investing and gambling is the psychological triggers behind them, right? That thrill or that rush that you get when you are gambling, every time you hit the button on the pokies, every time you roll the dice, you do get that psychological rush. Investing should be one of the most boring things you ever do. You should literally be investing and forgetting your password to the account and just letting it run. And it's this weird thing where now people have sort of tried to cross the two over where all of a sudden investing should be this like super edgy, exciting, day trading, like, instant gratification thing. Like, that's not investing. That is just gambling. And like, for the longest time, finance nerds were just finance nerds because no one wanted to hear their crap because it was so boring.
Yeah. And if you think about, like, say, the Robinhood app in the States, when you signed up, it comes up ka-ching. It comes up like a slot machine. We're going, you've won a free share. That is definitely designed around the psychology of instant gratification and gambling when they then hope you will trade stocks frequently so they make more money.
And you think about the type of, like, a specific type of person who is a gambler fundamentally looks at that and goes, okay, I'm not gambling because it's investing in shares, and then opens it up and gets that instant rush that they get off a pokie machine. They're hooked straight away because they can justify that.
Yep. Risk first return is another huge one. So if you are investing correctly, the risk first return should have a natural trade-off. So say, for example, if you're a long-term investor over 30 years in the share market, during recessions, it will drop, say, 30%. And the long-term average will be somewhere around 10% per annum if you have the right level of diversification. If you are gambling, it's high risk. You could potentially have, multiple times return on what you put in. The lotto, for example, you put $20 in, you get $40 million in return. Is a huge return. But you could put that $20 in and get nothing back for it, right?
Well,
they're very different risk return profiles.
Lotto is just an investment plan for people who don't know maths. It's like, you're never going to win.
Although I will say one thing with Lotto.
Yeah.
When it hits the point in Lotto where it has to be won, then the odds of winning
becomes significantly better.
Yeah, the odds of winning increase dramatically. Because the odds of winning Lotto?
It's like
1 in 38 million.
Yeah.
But then if you if you have to win, there's only 5 million people in the country, right? And then obviously some people buy multiple tickets, but then some people won't buy tickets.
It's about 1 in 7, 1 in 8 million.
So the odds increase dramatically. So there, if you get a gamble, that's how to do it.
Yeah.
Also, on a side note, geez, I find casinos depressing places to go.
Yeah, they are pretty grim.
Yeah. I know I'm being sidetracked.
So let's talk about some of the externalities of both investing and gambling, right? And I think a really important point to raise here around the gambling is the addictive tendencies of it. I know particularly in Australia, they have a large problem with kind of the middle class, and they're heavily promoting gambling on like every sports event, like State of Origin, even they started that, they do the big swoop around with the cameras, and instead of giving you the update on what's happening on the game, it's like, here's the odds, here's the halftime odds, right? But I know in Australia they have a massive problem with online gambling and people just consistently losing money throughout the day. I remember when I was working over there for a while, like you'd catch up with everyone in the morning and they'd be like, yeah, I've already lost like $200 before I got out of bed. like on like the Taiwanese like under 13s like racquetball tournament.
I had a mate like that when I was about 19. I rocked over to his house and he was on his phone looking real stressed. And I'm like, what's going on? And he was betting on under 17 female soccer, Mexico versus Netherlands. And I was like, name me one player. And he didn't have any idea. And I was
Brother
like,
doesn't speak.
Yeah. And I was like, oh, this is like,
that's
like,
bad.
This is really bad now.
But it's so common, right? And it's really easy to hide when it's so easy to place the bet.
Yeah. And he goes to me, oh, Mexico's paying $1.10. It's easy money. And I'm like,
what?
Yeah.
But you think about those negative externalities of that, and that is not just on the person. A lot of the times people who are gamblers and like heavily into gambling have families, they have dependents. There are responsibilities that they can't fulfill because they have been spending their money on gambling. And you, like any addiction, you think about the stress and the strain that puts on that person mentally and the people around them can have a very negative impact. And being addicted to gambling is a pretty taboo thing. And very difficult for people to get out of.
Yeah. The other piece around gambling a lot of the time is just remembering the house always wins. And the difference with this is with gambling, you're betting against the house, right? So they're making money majority of the time. Every once in a while, somebody will win against the house. When you're investing, you're playing with the house.
Yeah.
So you're investing with the big boys that are, investing into shares is fundamentally, companies that are selling goods and services and growing over time. You're playing with them and clipping the ticket on what they're doing over the long term. So that's a huge difference as well.
Yeah. And then if you think about some of the externalities of investing, so there are negative externalities with investing as well. But a lot of the time when you're investing, especially in stocks, you're actually investing into companies that produce things. So you can directly invest in companies, or there's other ways you can do it as well. But you are providing capital into a market that is generally used for production. And that is most of the time a really positive thing.
Yep. So some common misconceptions before we wrap it up. The first one is stock market investing is just like gambling. So investing in shares has risk, especially if you have a short time frame, and especially if you are investing directly into a couple of companies opposed to taking the average of the market over the long term. But if you're just investing in those direct companies, there's risk. If you are investing in the average over the long term, like essentially what you're saying when you go, it's just like gambling, for the share market to drop and never recover, you're essentially saying companies are falling over, nobody has jobs, the properties are worth nothing. Yeah. Essentially, you're saying it's the fall of capitalism, which, we all live long enough. The world goes, maybe it'll be right at some point.
It's just a bourgeois fantasy, James.
You're taking a bet on how the world is set up. So good luck with that.
Cool. And another common misconception for the gamblers out there is that it's not the Warriors' season. It's our season. They are a surefire bet. I want you to get out there, get down to the TAB, put a lazy 20 on them, up the wires.
Up the wires. Okay, on that note, we will wrap it up. The action today is for you to review your investment strategy and going, am I being too conservative, thinking investing is gambling and I'm not educating myself and getting started? Or am I being too risky and actually gambling opposed to investing in the long term? Please give us a sub, give us a review, give us a like. We will catch you tomorrow.
Up the wires.